Let's face it, taxes are confusing. Most people avoid them, fear them, or wait until the last minute to deal with them. But what if I told you that understanding your taxes could put thousands of dollars back in your pocket? This isn't just for accountants or the super wealthy. It's for anyone, especially you, if you want to take control of your finances. In this video, we're going to break it all down, step by step. How to think about taxes differently, what strategies anyone can use, and how a few small decisions throughout the year can save you thousands. So grab a notebook, because this could be the video that helps you keep more of what you earn. For life. Section 1. Mindset shift. Here's the first and most important shift. Stop thinking of taxes as something you just deal with once a year. Start thinking of taxes as a tool, a way to create opportunity. The truth is, the tax code wasn't just written to collect money. It was written to incentivize behavior, saving for retirement, starting businesses, investing in real estate, helping your community through donations. And when you understand those incentives, you're no longer guessing, you're strategizing. Section 2. Understand your tax bracket. Your tax bracket is the percentage of your income that you pay in federal income tax. And most people get this part wrong. The US uses a progressive tax system. That means you don't pay one flat rate. You pay different rates on different portions of your income. For example, if you earn $60,000 a year, you might only pay 10% on the first $11,600, 12% on the next chunk, and so on. Knowing your effective tax rate helps you make smarter choices, like whether to contribute to a Roth IRA or traditional IRA, or whether to invest in tax-deferred versus taxable accounts. Section 3. Track everything. One of the biggest mistakes people make is not tracking their income and expenses throughout the year. Here's what you should be keeping track of. Receipts for business purchases, medical expenses, or charitable donations. Mileage if you drive for work or side hustles. Subscriptions if they're related to a business. Educational expenses, courses, certifications, books. Use apps like QuickBooks, Self-Employed, Everlance, Mint, Google Sheets for a custom setup. The more you track, the more you can deduct. Think of tracking as building your own tax refund. Section 4. Tax-advantaged accounts. This is where real wealth building starts. Let's talk about tax-advantaged accounts. Tools that legally reduce your taxable income and grow your money faster. 401k. Contribute pre-tax income and reduce your taxable earnings today. Traditional IRA. Similar to a 401k, but for individuals. Great if you don't have a retirement plan at work. Roth IRA. Pay taxes now, let your money grow, and withdraw it tax-free later. Health Savings Account, HSA. One of the only accounts with a triple tax benefit. Tax-free going in, tax-free growth, and tax-free withdrawals for health costs. These accounts alone can lower your taxable income by thousands each year. Section 5. Deductions versus credits. Many people confuse tax deductions with tax credits, but they are very different. A deduction reduces how much of your income is taxable. Example, you made $70,000 and you deduct $10,000. You're only taxed on $60,000. A credit reduces your actual tax bill, dollar for dollar. If you owe $2,000 and you get a $500 tax credit, you now owe $1,500. Some powerful credits include child tax credit, education credits, like the Lifetime Learning Credit, earned income tax credit. Learn what you qualify for. You might be eligible for thousands of dollars you're missing. Section 6. Side hustle tax strategies. Starting a side hustle? You're now eligible for business deductions. You can deduct your home office if it's used regularly and exclusively, your internet and phone if used for business, business-related meals, advertising, and travel. Even your car mileage if you drive for business purposes. The IRS wants to support small businesses, even if you only make a few $100s. Keep good records. Those deductions still apply. Section 7. Work with a professional. Think hiring a CPA or tax strategist is only for rich people? Think again. A qualified tax pro doesn't just fill out forms. They can help. Plan your income strategically. Find deductions you didn't know existed. Keep you compliant and avoid costly mistakes. Plus, tax prep fees are often deductible if you're self-employed. This is one of the only professionals who can legally put money back in your pocket. Section 8. Plan year-round. Most people think about taxes in March or April, but the best time to plan is January through December. Here's what year-round tax planning looks like. Adjusting your W-4 to avoid huge tax bills or refunds. Timing big deductions like medical expenses or donations. Planning investments before year-end. Maximizing contributions to retirement accounts. Early tax season isn't a moment, it's a mindset. And planning now means way fewer surprises later. Here's a real example. Let's look at two people earning the same $80,000 salary. Person A doesn't track anything, contributes nothing, and owes $14,000 in taxes. Person B maxes out their 401k, tracks deductions, and works with a CPA. They owe only $9,000. That's a $5,000 difference every year. Over 10 years, that's $50,000. Same income, smarter plan. So now you know, taxes don't have to be terrifying. They can be your greatest wealth-building tool, if you understand them. If this video helped, give it a thumbs up, hit subscribe, and let me know in the comments. What's one tax tip you're going to apply this year? Until next time, keep learning, keep growing, and let's build wealth the smart way.